Today is Saturday, August 30th, 2025. Welcome to your daily news update on Blip Brief, small but almost everything updated daily.
We're diving straight into the last 24 hours.
Absolutely. We've got some, let's say, aggressive trade moves globally, surprising economic strength here in India, and a fascinating twist in AI later on.
Definitely worth unpacking.
Okay, let's kick off with India's economy. We're showing some, well, remarkable muscle. India's Q1 GDP growth just clocked in at 7.8%. That's a five-quarter high. Quite an eye-catching number, wouldn't you say?
It absolutely is. And what's really significant, is that it actually beat most market estimates, despite all the global sort of headwinds.
So where's the strength coming from?
It's pretty broad-based. Strong expansion in manufacturing and services both seem to be, well, firing on all cylinders. It really pushes back against some of those doom and gloom narratives, shows real resilience, driven by domestic factors, it seems.
That's certainly good news on growth. But there's always a but, isn't there? The fiscal side looks a bit different. The central government's fiscal deficit, it widened to nearly 30%, 29.9% to be exact, of its annual target by July. So, growth is up, deficit's widening. What does this actually mean for the bigger picture, for us?
Yeah, that's the crucial question. Now, this widening isn't totally out of the blue. A lot of it is down to front-loading expenditure.
Spending the planned money early in the year.
Exactly, getting projects moving. But it's also compounded by a contraction, a slight dip in net tax collections. So less revenue came in than hoped. And there's another piece here. Export credit growth. It's cooled off quite a bit, down to 4.7%.
And that connects there.
That's largely being put down to increasing tariff pressure globally. So you see that direct link. Domestic finance is tied to those bigger international trade tensions we'll touch on.
Right. It's that balancing act, managing growth, but keeping finances in check, especially when global issues hit revenues.
Precisely.
Good to hear the government's aware, though. Commerce Minister Piyush Goyal assured industry of measures soon to support them against these unilateral actions, which sounds like a clear nod towards the U.S. tariff situation.
It certainly does.
And on a more positive trade note, Qatar is apparently keen on an FTA with India. That could be interesting.
Yes, potential new avenues there. And connecting back to domestic demand, the chief economic advisor, Nageswaran, seems fairly optimistic. He thinks the upcoming festive season, plus some proposed GST reforms, could give demand a real boost.
Although, on GST, there's that push from 8 opposition-run states asking for a 5-year relief period, right? Citing potential revenue hits from the reforms themselves.
Exactly. That highlights the ongoing tension, the push for reform versus immediate state budgets. It's not a simple policy tweak. But beyond that specific debate, the broader trend seems to be a general uptick in overall investment demand across the country. That signals some business confidence.
Okay. And quickly, before we move on, a nod to the green push. Maharashtra and Andhra Pradesh topped the State Energy Efficiency Index for 2024. Good to see.
Definitely important progress.
All right, let's shift from the fundamentals to the markets. How are they digesting all this, especially the global pressures? What's it mean for your portfolio? The Indian indices definitely felt a wobble yesterday. Both Nifty and Sensex closed down about 0.3%.
Yeah, and that dip actually meant it was the worst weekly fall we've seen in 5 months for the main indices. Sentiment is clearly under pressure. We also saw higher rollover rates heading into September.
Meaning more positions carried forward.
Right, which often suggests traders are cautious, maybe even a bit bearish, about the Nifty in the near term. And this market dip, it's pretty clearly linked to those global events, especially the ripples from the U.S. trade actions. Cowboy moves lasso Indian bulls, as one headline put it.
Quite the image. And that volatility hit the currency, too. The rupee had a rough day. It breached the 88 mark against the dollar, closing at an all-time low. What's really driving that persistent pressure?
Well, it's a mix of factors, primarily mounting fears that these U.S. tariffs could slow global growth, hit India's exports, and strain our balance of payments. That's the big one. Add to that sort of fragile portfolio, inflows, less foreign money coming in, and just strong demand for the U.S. dollar globally. It creates a tough environment.
And our reserves.
They slipped slightly, now around $690 billion. Still a decent buffer, covers about 11 months of imports.
Yeah.
But the rupee's weakness, it highlights that challenge of navigating global trade and attracting capital.
Okay, let's talk corporate action. Reliance Industries certainly made waves at its AGM yesterday. Huge announcements from Mukesh Ambani.
Absolutely massive. A multi-pronged vision, really. First up, the Geo Platform's IPO is targeted for the first half of 2026.
And the speculation is that could trigger tariff hikes sooner.
Analysts think so, yes. possibly by year-end, as competition heats up pre-IPO. Then, a colossal investment, euro 75,000 crore, into the oil-to-chemicals, or O2C business. That signals a big push into higher-value products. Plus, a sweeping green energy strategy. They're aiming for 20 gigawatt of solar module capacity by 2026, a major renewables player.
And that wasn't all, was it?
Not even close. Another 40,000 crore is going into retail food parks. The goal, become India's largest consumer goods company, challenging everyone. And finally, partnerships with Meta and Google Cloud to accelerate their AI ambitions. It's a plan to dominate multiple future-focused sectors.
Wow. Okay, beyond the Reliance juggernaut, what other corporate shifts are catching your eye? Are we seeing broader trends?
We are. Imami, for example, expects demand to pick up soon. They're citing the better macro environment, inflation easing, good monsoon, good signs for consumer spending.
Makes sense.
Then you have Oyo's board approving a third try at an IPO. Persistence in the travel tech space. Ola electric mobility shares, they posted their biggest monthly gains since listing, shows continued investor belief in the EV story there.
And fintech.
Grow got the nod from SEBI for a pretty significant IPO. They're aiming for, $700 million to $1 billion? Shows appetite for strong tech listings. Oh, and ONGC confirmed they'll keep buying Russian oil as long as it's, quote, economical. A pragmatic energy security move.
Got it. And just quickly on specific stocks, ITC was up over 2%, along with Bharat Electronics, Asian Paints, gainers. On the flip side, Mahindra and Mahindra fell nearly 3%. Reliance and Infosys saw declines too after recent moves.
Right. And a quick word on precious metals. Gold jumped to a 2-week high, a classic safe haven move amid all this political uncertainty globally. Silver also saw a nice jump, up 5% in a month. That follows it being added to the U.S. list of critical minerals. Big boost for its industrial demand outlook.
Okay, let's broaden the view now. Shifting to the global stage, that U.S. tariff situation seems to have hit a major legal bump.
This is really significant, yes. A U.S. appeals court has ruled that most of Trump's tariffs are actually illegal.
Illegal? On what grounds?
The court was clear. Only Congress controls trade taxes. The president can't just declare a national emergency to slap on tariffs like that.
And Trump's reaction?
Vowed to fight it, take it to the Supreme Court. Predictable, really. But the immediate implication is huge potential rollback of major tariffs, which could ease global trade friction significantly. And for India, remember that tariff pressure we talked about impacting exports and the rupee. This ruling directly addresses that. It could be a game changer, potentially.
Very interesting development. Meanwhile, other U.S. news also raising some eyebrows. Some unusual political moves.
Yes, reports indicate Trump moved to withdraw Secret Service protection for former VP Kamala Harris. Separately, he's decided to block $4.9 billion in foreign aid already approved by Congress.
Mainly political signals.
Primarily, yes. But they contribute to a climate of policy uncertainty, which isn't great for business confidence or international relations. And adding another layer to trade scrutiny, the U.S. International Trade Commission is launching an investigation into solar panel imports from India, Laos, and Indonesia.
Claims of unfair trade practices. That could impact India's green energy exports.
Potentially, yes. It's definitely something to watch for our solar manufacturers.
But India isn't just reacting, is it? We're seeing active diplomatic engagement shaping the landscape, especially with Japan.
Absolutely. The India-Japan alignment seems stronger than ever, particularly on security issues. They jointly condemned the Pahalgam terror attack. They're aligned on Myanmar, Ukraine peace efforts, condemning North Korea. A real convergence of strategic views.
And economically.
Japan has committed a massive $10 trillion investment in India over the next decade. PM Modi's message was clear. Come, make in India, and make for the world. It's about investment, yes, but also building global supply chains with India as a hub. And just confirmed, Russian President Vladimir Putin will visit India in December. Shows India maintaining its strategic autonomy, engaging with multiple major powers.
Okay. Any other key global headlines we should quickly touch on? Political shifts, economic moves?
Well, Thailand's Prime Minister Paetongtarn Shinawatra was dismissed over ethics violations. More political turbulence there. On the corporate front, Ant Group's quarterly profit dropped 60%. Why? Costs of overseas expansion and big AI investments. Growth isn't cheap.
Interesting contrast with Huawei.
Exactly. Huawei posted a first-half profit. They seem to be getting back on track, partly fueled by that AI development wave DeepSeek kicked off in China. Intense tech competition. And finally, the U.S. approved another big military aid package for Ukraine, $825 million in missiles this time, impacting the conflict and defense sector.
All right, for our final segment, let's look ahead. Let's peek into the future, because this is where things get really exciting. Today's breakthrough is from AI.
Yes, this is genuinely fascinating stuff. Scientists in Singapore have developed a new AI model inspired by the human brain. It's called the Hierarchical Reasoning Model, or HRM.
Brain-inspired.
How so? Its core idea is really elegant. It uses two distinct modules, mimicking how our brain might separate tasks. One module does the planning, the strategic thinking, and the other handles the actual computation, the execution.
Okay, separation of planning and doing. And why is that significant?
Because it seems to work incredibly well. This HRM model hasn't just matched, it has actually outperformed the big names, ChatGPT, Claude, even China's DeepSeek on complex artificial general intelligence, or AGI tests.
AGI tests, like what?
We're talking things like Sudoku puzzles, navigating complex mazes, tasks that need more than just pattern matching. They require abstract thinking, planning ahead, understanding rules. This ability to separate planning from execution seems to be the key. It allows for more efficient and robust problem solving, especially in new situations it hasn't seen before. It feels like a step beyond just processing vast amounts of data towards, well, something closer to actual reasoning.
So this could be a big deal for how AI develops.
Potentially huge. For smart professionals like you listening, imagine AI tools that don't just generate text, but can actually help strategize, learn complex rules quickly, adapt on the fly. It really raises the question, could this hierarchical approach plan first, then compute be the fundamental architecture for the next generation of AI? A blueprint for systems that can truly reason and adapt. It's definitely one to watch.
So wrapping it all up, what does this all mean for you? From navigating those choppy waters of global trade and seeing the resilience of our own economy to getting your head around groundbreaking AI that learns more like we do, it's clear that staying informed, staying adaptable, is just non-negotiable now.
Absolutely.
And as we watch the world grapple with these old challenges like tariffs and embrace completely new technologies, maybe consider this. How will those legal battles over trade rules reshape the global playing field you operate on? And, perhaps more profound in the long run, how might the quiet rise of a brain-inspired AI like HRM change your strategic thinking? Not just for next week, but for the years ahead.
Lots to think about.
Indeed. Thank you for diving deep with us today. We'll be back next time with more insights to help you cut through the noise.